We'll get rolling here today, and boy, the USDA is not short on surprises with this report. So we're just going to get right to it here, quick, and go through a few of the big points. It came out today. We had a stocks number in here, and the corn stocks was at 1.236 billion, a little bit above estimates. The wheat was a little bit below, so corn was neutral, wheat was a little more positive, and it was a bean one that was a big surprise out there right now, as our bean stocks were up almost 81 million bushels or 82 million bushels compared to the estimates. We dropped down. Our wheat production was slightly smaller, not a big deal. But let's get to these numbers specifically. What do they mean, and how does this adjust our way of thinking? The one thing we need to go back towards, and this seems a bit odd as we're in harvest right now in 2021, but the USDA did make some production changes on the 2020 crop year. For corn, they lowered the production by 71 million bushels, and what they did is they dropped the yield from 172 previously down to 171.4, and then they also lowered harvested acres slightly. Now, the bullish argument then looking into the 2021 crop is if we're starting at 171.4 this year compared to what we thought at 172, maybe that 176 bushel yield could be a little bit high. Again, that would be the bullish side of the argument. On the bean side, on the lower part of the page here, and this was the big bearish number out there, is the USDA came in and they increased last year's total production by almost 81 million bushels. They did that by bumping up the yield almost 0.8 of a bushel from 50.2 up to 51 with a small change in harvested acres. Now, the one thing we want to mention here on soybeans is that this isn't unprecedented. We've seen some big crop production changes before in the past, and the years that stuck out to us is in 2014. The bean production for 2013 jumped 69 million bushels in this report, and going back to 2008, we had an increase of almost 91 million bushels. So this 81 million bushel jump right here might seem large for a September stocks report, but it's not the largest on record. What bothers us, though, and we're not saying this is going to happen in here this year, but when you get back down to 2008, we had November soybeans trading around $12 a bushel in mid-September of 2008. This report sent the market sharply lower, and by mid-October, we had beans down near $9 a bushel. This stocks report set up a $3 break back in 2008. We think that's a bit of an extreme, but we have to admit that got our attention. In 2014, the break was a little more modest from mid-September to mid-October of about $1 a bushel. So how is this going to change these supply-demand tables? We're going to just look at this corn number here quickly, and what we have on the yellow is how the stocks affects us. Beginning stocks are going to increase from 1.187 billion bushels up to 1.236. Yes, the USDA said last year's crop was a little bit smaller, but our feed usage and residual usage has got to come down. That's where the stock number will jump up. Now, if production and demand then stays the same from the September report to right now, we're going to get a slight bump up in ending carryout levels from 1.408 billion to 1.457 billion bushels. For corn, this report is mostly neutral. As we look towards a decent corn chart, though, what we have on here are these two red lines that are going back to mid-May, highlighting that we're really spending all of our time between $5 and $5.75 a bushel, and it doesn't look like we're going to break out of this range unless maybe wheat can pull us up, or if we break to the lower side, beans would break us down. What we noticed in here today, though, is that we are failing at the 50-day moving average. The big changes come in with this bean report. Okay, what we're doing is we're bringing our beginning carryout from 175 million up to 256 million bushels. That alone, leaving our production all unchanged, bumps that ending carryout level up to 265 million bushels. That's tough to hold $12.50 to $13 beans with a 265 million bushel carryout. The other bearish argument comes into play is that if last year we had a 51 bushel national average yield, maybe this bean crop could grow a little bit higher. We'll have to see with this October crop report coming out. As we look towards the November bean chart, this is where our concern lies right now. Is today you can see November beans went down to key support at the 1250 area, and it did hold. Hopefully that level does hold. But if we do break lower, we're looking at 11.85, which was the end of March low, or a potential break all the way down to $11, which was the end of January low on November soybeans. We don't want to get all doom and gloom in here on the bean market, but as these commodity markets as a whole, when we do break out, we tend to accelerate and we move much further than what anyone would expect. This is a big concern over on the bean side of it. As we flip over to wheat, we're just looking at the wheat here on the big picture. On this report, the USDA lowered production a little more than 30 million bushels. Lowered production a little more than 50 million bushels with a slight reduction in yield and harvested acres. When you carry this all the way down to the end, we're going to drop our ending carryout from 615 million bushels down to 564. Again, if you're looking for a bullish argument, you need to look over on the wheat side of it. Bringing up a December Chicago wheat chart, you can see over the last couple of months, we've really been in the 675 to 775 range. And with today's trade, we're trying to push back higher. And basically, we traded a few days below the 50-day moving average, but now back above. If you want to look towards a bullish market, you almost have to place your bet on wheat following this past report. Now, here's what we're thinking right now, okay? Our biggest thing is you got to look for breakouts in these markets, okay? And whether if you're looking at energies or metals or livestock or softs or the stock market, okay? And then get back over to the grains. What's been going on recently, when we break out, we really move, okay? And we go much further than what people would expect. So you can make the bullish argument, let's say on wheat and a breakout higher. You can make a bearish argument on beans for a break to the lower side. When we look at numbers on a report, we look at it, what are some big impact numbers or what are some game-changing numbers, okay? Our biggest thing is on the bean side of it in here right now. I mean, our old crop carryout or the carry-in jumping back up to 250 million bushels, just a slight bump up in production. All of a sudden, we're at price levels where we don't need to ration demand anymore. So beans is probably the biggest game changer out there, and that's more on the negative side. The other thing is on price rallying in here right now, what it shows is, does it do its job on rationing demand? Beans, the rally, I mean, it stopped in here right now, and the USDA went back and they raised the production up and basically left demand the same. But on the corn side of it, when you look at that higher stocks figure in here, it says that the higher price did rally that demand. When it's all said and done with right now, if you're bullish this market, you got to look towards the wheat to lead us higher. And if wheat can lead us higher, maybe it can pull the corn market with. If we're going to break, beans would probably be the downside leader. And if that occurs, does that drag corn down with it? We just wanted to give you a quick recap of today's report. Again, follow us along on our daily advisory report, and we look to be back here next Tuesday. Have a great day.